Hey everyone, and welcome back to the Mo Trades channel. In today's video, we're going to talk about how to actually use leverage to your advantage. A lot of people are asking, and I know it's a little bit confusing, so I've got a spreadsheet and I want to show you guys how I use my strategy and combine it with leverage to basically propel my profits. And remember, leverage can also propel your losses, so you need to understand how to use it properly. So stay till the end of the video, and if this video does help you, click that subscribe button so you don't miss any of these tips and tricks and tidbits, because trading is a long life career, and the most thing important to think about when you are trading is this is not a very quick skill to learn. It does take a bit of time, and the reason I'm making these videos is to give you guys the chance to avoid the years of mistakes that I had to make while I was learning. So let's get started. So as you guys understand, when we are scalping and using high leverage, the goal is to gain as much quick wins as possible and not necessarily chase a 10, 20, 30% win, because that is not actually the idea of day trading. When you are swing trading, you're going to be looking for 10, 20%. You're going to be looking for these big moves here, right? Like you're looking for something like this when you're swing trading. But my problem with that is that you then need a big stop loss, right? So like, let's say you entered here, your stop loss needs to be above 2%. And you can use this leverage strategy with swing trading if you'd like. And let me walk you through that. And then we'll walk you guys through the day trading way that I'd like to do it. But when you're trading, so like, for example, in this one here, let's assume you were going to take this short, right? And you set it up, you put it in here, and it's basically telling you that you want to have your stop loss always be above or below the recent high or low. So like in this example here, if we took the short here, our stop loss would need to be above here, right? So you're literally looking at a 2% stop loss required, right? You need to lose your risk levels about 2%. So if you're using this, what you would then do is go to the spreadsheet, and you guys can copy it, screenshot it, completely use it to your advantage. And like in this example here, if our stop loss has to be 2%, then we want to be doing anything under 50x leverage. And the math it does here for you is if you are on a 10x leverage, your liquidation is roughly 10%. So if the chart or the asset moves 10%, then you're going to have your margin liquidated, right? And it's actually 9.94%. I've actually got the math on here, including the fees, and you don't want to screw yourself by missing that concept. So in this example here, 10x leverage, you can only have a 10% move, which is a big window. But like in this example here, it's only a 2% window, and it's actually 2.09. So we definitely want to use about 40x leverage, maybe even 35. You are still gaining the benefit of multiplying the margin by that leverage amount. And the best way to think of leverage is, okay, if you have a $10 margin, right, we'll put that in here, and you're going to leverage it by, let's say, 10x. We don't need this to be a percentage. We need this to be a number, right? So just a plain number. And then you're going to then know the margin. So if you're using $10 margin and you 10x leverage it, then you're actually using $100 position size, right? So let's do this. If the asset moves 1%, wow, now we need percents, right? So if the asset moves 1% in total, you're going to take this number and multiply it by this. So you've made $1 in this very small example. Usually in our trades, we're using 50, 100, or 250, and even sometimes 500 in margin. It all just depends on the leverage that we're going to use on that said trade. So let's up the margin here, and let's up it to 100, but we're still going to use 10x leverage. So if you use $100 margin and you have 10x leverage, then your margin or your position size is $1,000. And if the asset moves 1%, then you've made $10. But it goes also the other way. If the asset moves negative 1%, then you're down negative $10. Now let's up the ante here and let's do 100x, right? So you can use $100, use 100x leverage, which now would make your position size $10,000. Right? And if the asset moves 1% from that $10,000 margin or that $10,000 position size, then your profit is $100. And you guys, these assets move like Ripple. I love trading Ripple. Look at this. If you caught this short here, there's 1% in 1 hour. So you're basically able to use $100 because that's your risk, right? That's your risk. And when you're using $100, think of this, your adjusted liquidation level needs to only move 0.97%, and then you would lose the whole $100, Okay, so make sure you keep that in mind as you're trading. That's your risk. When you guys in trading, it's exactly like a business. It's the same thing, right? So like I'll buy a business, there's a risk involved. The money I'm putting up to buy that business is my risk capital. And that's basically what's happening here, right? The margin you're using is your risk capital. Now I like using BTCC because it allows me to use cross, right? And that's why I'm able to use higher leverage, because let me show you this other example. I'm using 500X a lot, right? And you can see that through all my trades. You do take more losses, but if your losses are smaller, it doesn't matter because then your wins outweigh those losses tremendously, right? But in this example, if we're using a $100 margin and our leverage is 500X, if the asset moves 1%, we are up $500. Right? And that's what scalping is used for. That's the best way to actually scalp and make money. Now, I'm not saying 500X is what everybody should be using. I'm just giving you guys this example so you understand the math and then you can quantify it for yourself, right? So at $100 with 500X leverage, it's a $50,000 position. If it moves 1%, you're making $500. If it moves 2%, you're up $1,000 on said position. So in this example, we'd be using $100, right, to make $1,000. But now we got to think about what is going to be our risk, right? Because here's what we know. If it moves 0.19%, the full $100 margin position gets stopped out. Now, what I like about BTCC here with the cross option here is that when you're using cross, I can still have it be 2% or 1% stop loss. I never want to go that high, but let's assume a 1% stop loss, right? And we're just going to do the same thing here. We're going to do this, and we're going to move this down to, 15. We need this one to be that. There we go. But it's going to be a negative, right? And we're going to do it at a negative 1%. So right now in this play, we would be risking $500, but we'd be able to make $1,000 because you want a 2-to-1. And again, you could do that on this asset, right? So like in this example, let's say you caught the short here. You did not need more than a % stop loss, right? So you would have risked $500 on this move. So if the asset had just done this, boom, boom, we're stomped out and we would lose the full 500. Because what you never want to do when you're using leverage, and I cannot emphasize this enough, do not use high leverage and just keep the position open without a stop loss. You are always better off taking the loss and moving on and finding the next opportunity than leaving the position open and hoping. When I first started, I would just leave the position open and go, oh no, I can wait it out. And that actually hindered my trading. And the reason is because now that capital is locked up in this trade that I can't do shit with, right? And you don't ever want to be in that position. You want to limit that as much as possible. You are better off taking this loss, if it were to do that, than to sit here and like maybe the asset does this, right? And now you have a huge loss on your table because remember, when you're leveraging, you're multiplying everything, right? That's what our math here is. We are multiplying by the leverage to get the position size, right? Like let's even up the ante. If you're using $1,000 in margin, then you would have opened a $500,000 position. And if it moves 2%, you could make $10,000 on that trade. And these assets move 2% all the time. Look at this. We're going to remove the drawings here. Look at this. This is a literal 4% move in 3 hours. So even if you had just caught it from here to here, let's say, there's that 2% you're looking for, and you're able to do that in 1 hour and 45 minutes. Tell me, please, another job that gives you this much opportunity. Let me re-say that. Tell me another business that gives you this much opportunity available all the time in the market. I don't think you can. Right? This is why I love trading. This is why I am addicted to trading and always growing my balance. And realistically, it's not about the money. It's about just getting better trades. Because as you're getting better trades and you become better at immediately doing the math and being able to enter and exit a position while you're day trading, then you have unlimited potential. And over time, you then start sizing up your margin balance, right? Like when I first started, I thought, oh, I could do this. I'll put in, a $10,000 I'd put $10,000 in the exchange and I would just start with like $1,000 margin, 10x leverage, and I would get liquidated so much because back then it was extremely volatile. You guys remember I started in 2017, right? And I didn't even become profitable until 2023, right? So it took me that many years to pay my dues. And luckily now I figured out these spreadsheets. I've got the math immediately in my head. I can calculate it. I can tell you, hey, if I use $200 in margin with 500x leverage and it moves 1%, I'm going to make 1,000. Like, look at this. I can tell you right here. And it moves 1%, it's $1,000 in profit, right? And usually when I'm trading with 500x leverage, I try to always keep my stop loss under 1%, right? And I'm always trying to gain 1.5 to 2.5 to even 5% if I can on a trade. And the reason I'm not shooting for 10, 20, 30% is because then you're just stuck in the market with, again, locked up capital, not being able to find the next opportunity. And day trading is not about waiting it out. It's about finding a good entry, having a protected exit, right? So you have a limited loss, and then letting what you can run and gain as much as you can from that run, but not leaving it for weeks, months, because you're also paying a funding fee. Now think about this. If my position is $100 margin at 500x leverage, I am basically borrowing, right? Think of this. We're borrowing $49,900. And no matter what exchange it is, they have a funding fee. It's kind of like a bank, right? They charge you interest on the money. And we will be paying a funding fee on that $49,900 that we're borrowing, right? So if you like swing trading, I still do recommend it. I recommend all forms of trading, even long-term investing. I just love the day trading aspect of being able to get in and get out. And I find it as one of the best skills I've ever learned. I've run multiple businesses, but this one is just the love of my life because it's fully in my own control, right? It's on me to wake up, look at the charts, make a decision. Like we did not trade yesterday. We had 2 losses from the last position that we had open. Right? And with these 2 losses, you wait it out until the market is primed and ready to fit my strategy, and then I'll take some of these trades. You never want to chase when you're day trading. You want to be prepared and execute correctly, because the thing is, you guys, every time you take a loss and you get dwelled in it, and then you start chasing the loss and trying to fix it, you actually screw yourself. I did that the first 3 years. 2017 to 2020, I made the most mistakes. I did not even buy Bitcoin when it had that huge crash in 2020. You guys, like, I watched that full bull run occur and I was so disappointed in myself because I just kept trying to chase trades. I would still continuously short, not actually following a strategy. And that's why I've learned tracking my trades and being precise and persistent and treating this like a part-time job has made it a good career, right? You have to understand that. You can't just start trading and then become rich. I really want to put that out there because I don't want you to pay for the same things I've had to pay for. So please, please listen to the video and use it to your advantage. Like I'm begging you, don't make the same mistakes I am. And that I did make. And I will always try to make these videos as much information as possible and give you guys as much updates as I can on my trading so you can also see my downs and ups, because that's the only way you'll understand that it happens to everyone, right? A lot of times we see these big YouTubers posting their trades, oh, I made this much, but they don't show the losses, and I don't like that. Like you need to know when I take a loss, because then you know, all right, I'm going down a bit, but I'm gonna go back up, right? Because my gains, if these did not get stomped out, this would have been a $2,000 gain, and this would have been like a $1,500 gain. And as you can see, that's a huge multiple compared to my loss, right? So you can use leverage to your advantage. You just need to know what leverage size works on the trade that you're doing, right? If it's a swing trade, you're okay to use 10x, 20x, specifically if you know your stop loss is gonna be a 5%. For like this example, if you're going to use 20x, you want your stop loss to be roughly 4%. And like here, right? Like if I'm going to have a position that's a 20x leverage, I'll probably use $1,000 in margin, which still gives me a $20,000 position size, and my stop loss is 4%. So I'm willing to lose $800 on the trade. And let's say my take profit I'm shooting for is about 10%. So I'll make $2,000, but I could lose $800 plus the fees, right? You need to think about that. And even in this example here, we are borrowing from the exchange still $19,000. So there are funding fees accrued as well. So you just want to kind of keep that when you're doing the math, right? And let me explain why I am comfortable using these higher leverages. I am comfortable using the higher leverage because instead of needing $1,000 margin, I can use $50 in margin. I can use a 500x. I can shoot for a 2.5%, and I can make my stop loss 1%. right? So in this example here, I'm borrowing $24,950 from the exchange. So yes, we're paying the funding fee for that. And I'm able to make, if it hits take profit, $625. And if it hits the stop loss, I'm losing $250 and the fees involved as well, right? So you always need to do the math before you're entering and taking these risks, right? You gotta be very, very logical about it, because the minute you get emotional in trading, you're gonna lose everything. Trading is fully a logic game. It's all about logic, and it's all about willing to take the risk and know the risk variable that you're taking. Because the many traders that I meet, they just, oh, I just enter a position and I leave it open. I'm not a big fan of that, because then you are just risking something big, and that doesn't actually, in my opinion, make you a trader. That just kind of makes you a risk taker. And it does work out for some people, but it hasn't necessarily worked out for me. And I don't know about the rest of you guys, that is just not my favorite way to trade. I like being able to be in control of my money. And I do feel like using higher leverage, calculating the margin, calculating my loss, calculating my take profit, and then sticking to my strategy has netted me good money. And let me show you this, right? So like, these were the trades we were going to take today. I actually did not get a chance to enter them, which is why they're not on here. But I was going to take this short. Here is the reason. One of my strategies I like to use is the Fibonacci Bollinger Bands. Shout out to Levi Crypto. He's actually the one that showed us that. This is the indicator. I love it, right? And these bands here basically tell us that we're overextended. And you got to remember, it's different per time frame, right? Because it's calculating it differently. And you guys, there's two lines on my chart. There's these, which is the Fibonacci Bollinger Bands. And then there's the Naira, I can never say it right, envelope. You need to remember the envelope is a repainted indicator, so you don't want to just rely on it. You want it as part of your confluence, right? So we're going to go back to the 5-minute time frame. We can see here that we've completely overextended. When I first started trading this strategy, the minute it touched it, I would start shorting it, and that never worked. You need to give the asset time to play out and get out of the envelope. So here, this was a perfect confirmation, because we've had two things occur. We had the envelope happen, and we had the Fibonacci Bollinger Band extension happen. And then here is a good entry for a short, because now we were not able to make a higher high. Hell, here is a great entry for a short, because again, we were not able to make a higher high, right? And then how I do it is the minute I enter, I know, okay, my risk here is about 0.52%. I'm okay with risking at 500x 50 margin. My stop loss is 0.52%. So I'm risking $130. Actually, I'd probably do 100 margin, right? So I'm risking $260. And my goal is really just 1.5%, which is actually a 3x to the risk that I'm taking, right? This is a great R&R for a trade, right? So, okay, our profit capability here is 750, because that's the goal. Our loss is 260, but another way I protect myself is I use trailing stop losses. And you guys, I always practice trade. Even if I'm not taking a real trade, I'm practice trading, because that's the only way I'm going to keep honing my skills and making more and more money, right? Trading is not something you learn and you just keep doing it. You're going to keep learning. And when I realized that in 2022, it devastated me. It took me like a week to get over that hump, but then I understood, like, in every business I own, I'm always forced to learn something new. Nothing in this world you're just going to learn once and be a master at forever, because things change all the time. The market changes every day. Liquidity enters, exits, right? So you want to be prepared to understand that you are going to need to keep learning when it comes to trading, but just find the right guys that are teaching you the info that makes the most sense to you. And everybody's strategy can be different. You can even take my strategy and bend it to what fits your lifestyle better. You can switch it to a swing trading strategy and do it on the higher time frames, but then you're just going to need to change your stop loss, your leverage, and your take profit numbers, right? That's how you're able to adapt other people's strategies and kind of create one that works to your own advantage. But here, our stop loss was originally here, and then as the market started moving to our favor, this was the trailing stop loss end. So this is actually where that trade would have closed out for us, which is at 2.68%. So actually on that trade, we would have made today $1,340, and we would have only risked $260, still using high leverage, low margin, right? And think about this. This trade is only from here to here. It's a 5-hour window. So that means we only got hit with their funding fee rate once. So it's not that much money at all. And that's why I don't mind using high leverage in lower time frames. Because if I was swing trading this, my fees for funding could have been thousands of dollars over the next week or 2 weeks, which until just eats into your profit. That's really shitty. You don't want to just be paying to keep trading. That's not fun. I did it for years. Please don't do that to yourself. Please don't do that to yourself, okay? But like there. So this would have been a 2.68%, and the trailing stop loss occurred where we originally had it here, right? We started moving it here. Then the market shifted. It did not cross it, which is awesome. Sometimes it does hit it, but I still see this as a win, right? Because even if we just got stomped out at 0.59%, that is still a one-to-one. Let me show you that. That is still a $295 profit day, and we still would have only risked $260. And I actually consider that a risk-free trade, right? Because we've already are in profit, and if the stop loss got hit here, we are still out in the money, right? We paid our fees, we paid our funding fees, and we pulled some money out. That's a great day in any business, right? And then once it dropped again, right, we would then move this down to here, right? And then it dropped again, we moved it down to here. But we want what we all call a change of character, right? So when it changed from here to here, this is a lower low. Sorry, my drawing's bad. I'm using the trackpad. This is a lower low than here, right? So with this lower low, we've officially changed character, and that allows you to then move your trailing stop loss down, still giving you a good window and protection. Yeah, look, if we didn't use a trailing stop loss and we just let it run, we could have capitalized on what? 4%, but what's the probability of catching the bottom? It's a lot harder than you think, right? Another way I like to use it too is if when it bounces off of this envelope, it's really a time to jump out. I tested that for a while and it does work well, but then I'm still stuck with the whole stop loss being up top. So I really like the trailing stop loss because it actually raises your percentage of win rate. You might not make as much every time, but if you're winning 80% of the time and it's still a one-to-one R&R every time, you're a very, very profitable trader, right? So after that, it went down again, broke through. We moved our stop loss down to here, and it actually came back up and hit it. So this was our exit, right? And then the same thing happened later in the day, right? Woke up this morning, we saw that it hit the band. We had another drop from the band, but then we made a higher high. So that's a change of character, right? Because now we're breaking that low, right? So it looks like the trend is changing. And again, since we're scalping, we don't care if it doesn't run up. We just want to make money, right? So we enter there, trade starts moving. We did not break this change of character, so we did not move the trailing stop loss. So we actually could have been kicked out here, right? Let's actually put the number in. Our stop loss is 0.49%. So our risk in this example is $245, right? And then it shot up. Well, once we saw the shot up here, we've now broken change of character here. We were able to move our trailing stop loss to here, and our profit was very small because it kicked us out. It was at 0.44. But that is still a great profitable day at 2 trades at around $400, just from being consistent, using a trailing stop loss to our advantage while using leverage to our advantage. Now, a quick recap so you guys understand. Definitely take a screenshot of this. Freaking hang it on your wall, like whatever makes it easier for you. Here, I'll maybe hide these for now so you guys can take a nice little screenshot, and we'll hide these too because you don't need these, right? Boom. Take a screenshot of this, right? And what it's basically telling you is at 10x leverage, your liquidation of your full margin is 9.94%, okay? The profit at 1% is going to be 0.1, right? The profit at 2% is 0.2, and this 0.2 is to the margin of your balance, right? So like, let's move down. If you are at 100x leverage, if it goes against you 0.97%, you risk your whole margin, right? But at 1%, you're gonna get 1 times your margin. So like these, you basically multiply times the margin, right? So 1 times your margin, 100x. So if your margin's 100, you made $100 on a 1% move. If your margin's 100 and you're at 100x leverage, then you would have made $200 and so forth. And let me give you the last example here for 500x. If you had a $100 margin and you 500x'd it, but it went 1% to your favor, you would make 5 times the margin. So if the margin was $100, you would be up $500. If the margin was $200, here you'd be up $1,000. So really just understand leverage can be very, very powerful and beneficial if you use it correctly. right? So definitely take a screenshot of this, right? I'll get you guys the next video out here, hopefully tomorrow. We'll find some good trades and we'll get them posted. One thing to everybody to understand, I love the channel, but I will not push myself to take random trades just to show them on the channel. That doesn't help. That doesn't help me make more money. Doesn't help you guys actually learn. This channel is not made for clickbait. The goal is literally to just teach you guys everything that I've learned over these years and to keep me accountable while I'm consistently trading, right? So I'm hoping to help both sides here, build value for all of us. Make sure you're subscribed. I know it was a bit of a longer video, but I really hope it helped you understand how to use leverage and the math for leverage to your advantage, all right? Thank you guys so much for watching today. I will see you on the next one. Make sure you're subscribed. Comment, let me know if you've got questions. I'll also put my Telegram below. If you've got questions, please don't hesitate. Reach out. I love the questions and I love helping. Like, the more I teach trading, the better I'm gonna get as well. So thank you for reaching out and asking. I'll see you guys on the next video. Peace out.